Want to touch on Bitcoin, want to touch on private credit, want to touch on this deal economy that we're living in right now, and where all of this lies in the context of the bubble or the 80% bubble you think we're living in. But let's go back to the leverage for just one moment, because we were talking about that a lot during this broadcast in the last couple of weeks about private credit and the like. Where is the leverage that we should be worried about, if we should be at all? Do you worry about private credit and how connected that is to the banking system or not?
I think we have a challenge in private markets. If you're looking at the private equity markets,
okay,
they have a bunch of problems. In other words, can't sell deals, pricing of deals, returns, and so on, can't get cash out of them. And then if also you're looking at venture, venture is having problems. And a lot of private credit is connected to private markets.
Right.
Okay. And I think that that dynamic is a risky dynamic in terms of there. But the government credit is what I'm most worried about. In other words, the devaluation, the supply and demand of that over the next 3 years. I'm deeply concerned about that. So debt, and it's increasing because there needs to be more borrowing. Right. You're seeing the hot companies now borrow money rather than raising
And your
equity.
worry is just about inflation and the value of the dollar, and therefore you hedge it through gold. We haven't talked about Bitcoin. Is that how you think about it, or are you thinking about something else?
Yes, I think debt is money and money is debt. What I mean, debt is money. When you're holding a debt instrument, you're getting a promise to get money, and the value of that money makes the value of that debt. And the same is true. You hold money, what you're holding it in is a debt instrument. And so what we have is too much debt, and particularly, let's say, the government debt. Right. But other than the government debt, we're now creating the private credit. And you're also creating vehicles that are leveraging vehicles. In other words, 5 times an ETF that's 5 times the volatility of something else. That's the dynamic that I concern myself with. So that means then, what is the money? What is the storehold of wealth? Okay. In terms of that type of security.
Would you buy Bitcoin?
So there's a supply demand. I have a small percentage of Bitcoin I've had for forever, like 1% of my portfolio.
But do you think you should have more? We keep watching.
But I think I've said the same thing over and over again about Bitcoin. I think the problem of Bitcoin is it's not going to be a reserve currency for major countries, because it can be tracked and it could be conceivably, with quantum computing, controlled, hacked, and so on and so forth. The advantage of gold is that it's an asset that you can hold, and you're not dependent on somebody to provide it. That's why it's the most popular, not fiat currency. I do think that we think what is the problem is a debt problem. I mean, particularly a government debt problem. And that's not true just of the U.S. We're paying too much attention to the U.S. If you look at what's happening in the U.K., if you look at what's happening in France, number of countries, they can't issue more debt. They're at a limit because the market won't have that. But they can't raise taxes because people leave when they raise the taxes, and it hurts asset prices and so on. And then they can't cut spending. So what do? When you can't borrow and you're running big deficits and you can't do any of those. So you have these political changes that keep taking place. Each of those countries had 4 prime ministers the last 5 years. So I think that as we have these also large wealth gap issues, which means that there are billionaires, and then there are the, let's say, the top 10%, the minus 60%, the lower 60%. Then there's talk of wealth taxes. There's that issue that starts to enter this. There's not enough money around.